Nick, welcome to R4E, the Reason for Everything podcast. Excited to have you on the show today. I know this was a long time coming and we had to move this around a few times. Excited to jump on. Before we were filming, we were talking through your decision between two walk-up songs, but we'd love to give you a moment to walk the audience through Dust on the Bottle, why that's your walk-up song, and then we can dive into a little bit about your background.
Sure. One, like all different kinds of music, wanted to get one that highlighted a bit about Vint and what we do. So figured one that talked about dust on a bottle. We were out in bourbon country, and the old bottles there, they're quite dusty, and they're known for having like the dust right around the where the liquid would be filled. So that's the preface for that song.
I like it. Maybe I'm just too close to the source, but I didn't even think about that in your selection, and that's maybe my own naivety. But I think it's a great choice, and maybe with that we jump right in. So for those of you who don't know, Nick King is the co-founder and CEO of Vint, and maybe I'll just give you a quick minute here to give the audience a quick background commercial on Vint, what you guys do, and we can dive into your all's origin story after that.
Sure. Yeah. Vint is a venture-backed fintech platform that is creating financial products for the wine and spirits industry. So think about like when a company goes public, you can buy shares in that company. We do something very similar for rare wines, as well as spirits. So say a collection of 50 bottles of very fine wine, $2,000 a bottle, $100,000 worth of wine. Investors can purchase shares in those collections, and institutional investors can invest in funds to get exposure to the asset class.
Super cool and exciting. As someone that studied finance in undergrad and is in a finance industry today, it's really interesting. And part of the reason why I wanted to have you on is because I just want to pick your brain about your all's business, and it's, like I said, super fascinating. But maybe before we do, we rewind a little bit. Before we started filming, you mentioned you're from the Richmond area. There's a lot of good wineries in Richmond, but not necessarily known for wines or necessarily spirits. But maybe you get us up to speed on how you got into the industry. Maybe we rewind to growing up in Richmond, if there was any sort of early interest in that industry. Even I don't know if you worked at a restaurant or a bar that got you interested in the space, but yeah, maybe get us up to speed a little bit.
Sure. Yeah. Grew up in Richmond, Virginia. Played a lot of sports. Always been a really competitive individual. Attended University of Virginia, and was originally pre-med. I learned a little bit about opportunity cost and decided to go a different route, which took me down the finance route. My first job was at a value investment fund that ran about 20 billion domestic equities team. So you ask what brought me to this industry. And I like to say I am the least passionate person about wine and spirits on the business team here at Vint. So, never worked in a restaurant, never worked at a winery. What really interests me is financial markets. So, what was kind of the early what was my early experience in markets? One was like trading Pokemon cards. So you think about what is a market? It buyers and sellers facilitating price discovery. And my early experiences in markets were definitely fragmented, opaque markets, Pokemon cards, and then FIFA players. So in that video game where you play soccer, there is an open market where you can trade players, and there I was had created this way to quickly trade players, find arbitrage opportunities, and build up kind of your bank doing so. So thinking about um, what was the earliest experience, that was it, which then took me to the value fund and now to Vint.
Super interesting, and probably the first person to ever mention Pokemon on this podcast. Probably not the last, but I know I have some listeners that'll put a smile on their face nonetheless. But super interesting background, and interesting as the co-founder and current CEO that you have maybe less interest in wines and spirits than your colleagues, but maybe in that to that end. So you obviously had the interest in finance and markets. We talked about this briefly, but the traditional path of going to big state school and then working at a traditional consulting firm or going right into corporate America is the pretty standard trajectory, especially for people that grew up in our respective areas. But out of school, did you know that you wanted to exit out of a traditional 9 to 5 job pretty quickly, or what was that process like for you? Did you have this idea of Vint in the back of your head all through undergrad, or when did that idea speak to you and you brought it to fruition?
Sure. I think a lot about like what has driven me to do this, and have dealt with like some pretty challenging things across my life that I think kind of pushed me off the traditional path and like opened up this concept of like, okay, like life is pretty short. I should do something that makes me, more interested or gets me energized. And that I think is the genesis to getting off of the traditional path. Was I want to kind of like maximize my time here, and with that, I think startups and starting your own business, working for yourself is really an interesting way to do so. So I did the year and a half in a traditional financial services company. And really, I had this idea, and I won't give the whole spiel of like, oh, I always knew I was going to be an entrepreneur and all that, blah blah blah, kind of revisionist history. A lot of times, in my mind, it was just finding something, and like I would say I'm very intellectually curious, and the thing that uh, caught my attention about the industry, as I mentioned, um, it's not wine and spirits, it's the market aspect. And you learn if you get a finance or economics degree about this example of inefficient markets that goes back 18 or 1900s. I'm not sure when, but you have Royal Dutch Shell and Shell. They're two of the same exact companies. They're entitled to the same exact earnings per share. One trades on one stock exchange, the other trades on another, and they trade at like a 10 or 15% spread. And it's kind of this classic example that's used um, to explain an inefficient market. So as I dove into the wine and spirits market, I kept finding examples of this where, okay, this, 2010 Latour traded for whatever, $1,000 over here. It traded for 1,500 over there. It traded for 800 over here. It really was that nugget that led me down this path to starting Vint. And I would say uh, I look back. I started working on it like 4 years ago. A lot of it was nights and weekends for the first year and a half, and like I knew nothing. Candidly, I laugh at some of the early materials we put together, but I think I've stumbled across something that is like that I am very passionate about, which is entrepreneurship. Um,
I like it. And now, in doing my homework before this episode, I know on your all's video you mentioned how you look at different asset classes in your work and in your and building up this kind of idea and framework for Vint, and the wines and spirits industry or subsector really caught your attention. But I have to imagine they're easier markets to really dive into with probably less steep of a learning curve, and probably even maybe even more appealing to you. The things that come to mind are watches and cars, and maybe cars isn't the best example. But there are probably other asset classes that are non-financial markets per se. But was there another asset class that caught your eye initially? Like, I feel like wines and spirits is not the easiest part of the pool to initially jump into.
yeah, it certainly isn't. So there's been a movement to democratize different investments. We actually don't use that word at Vint. We find it to be kind of polarizing. And with that, it was real estate, there was art, you've seen watches and collectible cars, all different kinds of platforms doing similar things to what we do. What was most interesting about wine really was the data. The examples that you used, watches, collectible cars. I'll even throw Pokemon cards back out there because that's kind of an asset class. There's far less historical data going back. Like with those assets, you can't find hardly anything related to historical performance. With wine in particular, there's a study that was published. A Cambridge professor worked on it, and it outlined the price of wine from 1900 to 2012 and showed about 8.5% annualized returns over that period, with pretty low correlation to traditional financial markets. So I think combining a long track record of strong returns, low correlation with a really inefficient market, it kind of was the perfect combination to go out and create a financial product. One of the really interesting things about this industry is prior to Vint, basically the only two ways to invest in the asset class was send a wine merchant some money and they'll buy wine, and you'll store with them. It was really opaque, really inefficient. You could basically only do so in the UK as well. Um, and then the other was you had to have a seller. So with those two being the only ways to really invest, we thought, well, let's take a financial approach to this, spend a bunch of time with the SEC and FINRA to build our framework to make a true financial product where people can invest in the asset class.
Got it. You were 24, 25 at that point when you were getting Vint started 4 years ago. Is that right? Or how old were you at that point?
Yeah, I think I was 21 when I was working on the idea first. So
How does a 21-year-old even synthesize the idea saying, hey, I'm going to go to the SEC and FINRA and try to figure out a way to build my own markets? What was that process like for you? Is that when you brought in outside help, or how do you how did that manifest out into fruition?
yeah, so a function of my job at the value fund was like I've gotten quite used to reading SEC filings, so 10Ks, 10Qs, that kind of stuff. Um, I think one of the arbitrages that's out there is like people who just read stuff. Like I think most people just like skim whether it's contracts or SEC filings. If you really read, you can get a pretty good understanding of how businesses work. The the first company that I really dove into when I was actually reading a morning newsletter. I saw a chart that showed wine returns compared to other things. Like, okay, that's like moderately interesting. I was looking at Fundrise, who people are probably familiar with. They're actually based out of DC. And it's a way to fractionally invest in real estate. I dove into their filings and saw that they were like creating these funds in a way that were open to all types of investors. And I kind of built off of that precedent of Fundrise of like, okay, they're doing this for a different kind of asset class. It was still really new. We operate under something called the Jobs Act, which was created in 2012 but expanded in 2016, and we started working on Vint in 2019. So it was new, but we fortunately did not have to necessarily blaze the trail. It was there. It certainly was not a clear trail, but it was there, and that's the framework that we used in the beginning.
Got it. So you use that framework, you start putting this business idea, business plan together, dialing into the wine and spirit space. And then at what point were you realizing, hey, I have a pretty sound business model? When did you get outside what was the next kind of step from there? You figure out you have a business, or figure out you have a market there. What happened next?
Sure. So I'll highlight that I did everything basically totally wrong from the beginning. You know, you mentioned taking a different path. The thing about like the traditional path is that like everything that you're taught in school and through internships and stuff, it um it kind of perpetuates the way of thinking of that traditional path, where this like you have to think um you have to think differently than create a business plan. Like the way that I think about things is less through kind of causal reasoning, more effectual. There's a really good paper written by a UVA professor, and it's called Effectual Entrepreneurship, which basically says like you're taught to create this business plan, to plan everything out and do it. Whereas she studied a lot of entrepreneurs, and in reality, they're kind of, I guess, to paraphrase, like going with the flow with an end state in mind, but realizing that it is not possible to plan out how you get there. And it's going to go up, it's going to go down. That's just a part of it. And I think that's easier said than done to accept that, but I try to do so. So, anyways, tying that back to the beginning, yeah, I made a business plan. It's funny to look back on it. Some things still hold true in terms of problems we identified. Um, got a check from my mom, which was pretty small, but it like went to raise a little bit of money. Still had the day job at the time, and got together with my co-founder Patrick. He was a software engineer at Capital One. We were friends from college, still really good friends today, as well as co-founders of the company. And we kind of started just chipping away at the various problems. There was a time and place where Vint was going to be a data-driven hedge fund to invest in wine and spirits. There was a point in time where we were going to be StockX for wine and spirits. And ultimately, we went back to this core problem of like the industry is largely uninvestable. So let's create a structure, a financial structure to invest. And that's when we started with the SEC. And a little side tangent, as the company has grown, we've actually created StockX for wine and a data-driven hedge fund. So those ideas have come full circle, but we started a 9-month process with the SEC. That was when we quit, was when we were through that. We had raised maybe 100,000 of friends and family money. It took like well over a year to do so. But at that point, we quit. We got the SEC qualification. We were kind of just Patrick and I working on it unpaid for 9 months, hired our first employee, launched the business, and have kind of been off to the races since then.
Too cool. I'm taking notes here because there's a lot I want to double click on. First of which around really just the point of resonation around effectual entrepreneurship. And again, it's almost self-fulfilling prophecy. When you go to school, you take your management classes, take your finance classes, they tell you get your business plan ready, they show you the pitch decks and the samples of those and what successful businesses have looked like in the past, and get so caught up in putting something like that together. And then other ventures that I started or tried to start out of school, it was always, all right, I got to figure out my business plan, figure out my business model, figure out my financials, and then I'm going to go and make this business. And there's a lot of entrepreneurs out there. I know Ryan Breslow, who founded Bolt and a handful of other companies, always says builders build. And that's kind of matriculated across Silicon Valley and other kind of startup ecosystems now. But it's really when I went and just bought this microphone in January and started recording, that's really when I was able to kind of build the most traction in any of the businesses that I've started. And so totally resonate with that. The other interesting point, and again, why I think it's important to kind of document and keep track of all of your ventures, whether it be because you don't really know how it's going to shake out. So it's interesting that you guys ended up pulling back the StockX for wine and the data-driven hedge fund for wine and spirits. And so we'll have to unpack that in a second. But before we do so, you mentioned you were really unpaid for 9 months when you and your co-founder, was it Ryan? Is that correct?
Patrick.
Patrick, when you and Patrick were kind of working before you hired your first employee and launched, what was that like? Was that a scary time? Were you starting to think about packing up the business at any point, or what was that? What was your headspace like at that time when you were kind of just floating out in the ether, waiting to launch the product, launch the business?
I think we did a good job of burning the boats. Once we quit, we burned the boats, which is really important. Like if you keep the boats, you always have in the back of your mind that, oh, I can go back. But when we quit, I would say I burnt the boats once I started spending investors' money on different things. Like we did a big data project, and bought like $10,000 worth of data, and I was like, well, I don't have $10,000 to pay people back. Like we have to, uh, you know, really go for this. It wasn't for another year that we left our jobs, but I think we've been really fortunate in that I think one of the most important things in startups is momentum. And that could be real momentum or that could be like perceived momentum. Through that 9 month process, there were certainly ups and downs because we were going through SEC qualification for the first, 5, 6 months of that. Patrick was, working a ton to get the product ready to launch. And then when we launched our first collection, it was a $46,000 collection of California wines. We launched it at noon, and I remember we were sitting in my apartment and we hit refresh, and within the first 5 minutes, like half of it had sold out and ended up selling out in under an hour. And I still think that was one of the best days since starting the company, because Patrick had just worked really hard for the last 6 months to get the product to a place, and we had spent 9 months going back and forth with regulators to get this thing out there. So because we were continuously making progress with regulators, with the product, to then a product launch, to hiring someone, to going out to fundraise for a pre-seed round, we kept momentum, and frankly, just burning the boats is the most important thing.
Yeah, it's interesting. You hear that from just about every entrepreneur out there. So there has to be some validity to that.
Yeah, I'm a believer that most people would be fine if they just like kind of quit and said, okay, I'm giving myself like 2 years of personal runway. I have to figure out how to do it. You force your hand on yourself, and it makes you get creative.
It's fascinating. I've had the same conversation with so many guests about taking that leap of faith and knowing that you'll make ends meet. And if you have that kind of like undeniable belief, whether it's what the business that you're, or whatever the idea is that you're working towards, the personal runway that you're working off of today, or whatever that kind of materializes out to be. But it seems to be the case for just about everyone I've spoken with on the topic. I guess the other things you mentioned, your pre-seed fundraise. What was that process like for you? I know that's a goal for a lot of startups and founders as they're looking to get their business off the ground. Usually the thing that they're working towards is saying, hey, I'm going to get, you obviously had a strong backing from family and friends, raising around 100K, you said, but what was that like going together to put a seed round, or I guess pre-seed round, and go out to fundraise like that? What was that process like for you and Patrick, and what did you learn from that?
Yeah, a common thread as I look back on those times, I had no idea what I was doing, whether it was starting it and creating business plan. I remember I can remember my first 2 VC meetings. I was like super nervous, which is the exact opposite approach you should be taking into those meetings. And I it was not a good pitch. The funny thing is both of those investors actually ended up investing like 6 months later. So one thing that I kind of I used to gear up for the pre-seed was I started sending out monthly updates to a small group of people. It was really I cold emailed like 200 VCs and like 10 people responded and I got them on a monthly update list. So I started sending those in January of 2021, and it was May when we started raising. So I took a few meetings, and obviously no one invested because you have to get to like 100 no's minimum before someone invests. So I then stepped back and was like, okay, I need to put together a process. So like I was fairly young, like UVA is not like the factory for venture capitalists. There are some, but I went through LinkedIn, found some people. I probably set up 25, 30 meetings. We actually got one term sheet and ended up not taking it, which was, you look back on pivotal moments of the business. Like I think if we had taken that, it would have materially impacted our ability to raise more money. So I'm it was a lot easier said than done when it was going to be more money than we had ever raised. And um, we ended up, after that, momentum had stalled. So we'd been fundraising for 4 months. We had no money. The business had been doing pretty well. So we had started to build relationships with some of our investors on the platform. So a lot of those people were like, yeah, we would invest. That momentum of 250, 300,000 from investors on the platform, and from some angels through our network, led us to kind of getting the first big check. A pretty funny story. I don't know if I've ever told it on a podcast, but I was in New York, and hadn't been in New York much prior to this, maybe one time. So I was bouncing between meetings, and I got on the subway, went the wrong direction, ended up in Brooklyn, had to turn around, my phone's dying. I'm like running to make it to this meeting, which was with FinTech Ventures, and I've become pretty close with Luke, one of their partners, and 5 minutes into the pitch, the fire alarm in the hotel went off. So I ended up pitching for the next 45 minutes from the side of the road on the sidewalk. And it ended up, they were the biggest check in the pre-seed round. They invested in the seed, but that's from there it was like kind of a snowball rolling down a hill. It just piled on.
That's crazy. I mean, if it probably couldn't have gone any better if you were in your room given the outcomes. But what was that the really, call it quote unquote, I made it moment for you guys when you got that check from FinTech, or was it the 42,000 or 43,000 fully subscribed for that initial product launch, or what was the kind of first like, all right, like we've got something here? You first maybe deep sigh of relief or jump of excitement you made as co-founder? Was that it,
Yeah.
or has it happened yet?
It hasn't. One day I'm thinking maybe we will have made it. I am someone who is kind of like um, always hungry. Like, yes, this week was good. How do we make next week better? Like, it's unfortunately or fortunately how I'm wired, of like uh, being content with something is a tough state to reach. So when we had the first one, it was like, well, we have to go to our second, third, fourth. We've now done like 95, and it's like, well, how do we do our next 95, and how do we make them bigger and better than the first? So um I think there was a lot of excitement when we closed that from FinTech, and that was it's funny, and I am sure people have shared a similar feeling. It's like, I think we both always felt like it was going to get done. Like we felt like we were gonna get it done. Even like I remember we had to, like, because of cash flow things, put some more personal money back into the business, just to cover payroll for 2 employees. Even then, we were like, yeah, we're gonna get this done. So, um, with that being said, there was still a ton of excitement around that time.
Yeah. And maybe as an overlay, while this is all going on, you're going out to fundraise and the business is really gaining momentum, as you mentioned. There's still the pandemic going on as the backdrop for all of this. And so as you're going to hire employees for a pretty, to your point earlier, a nascent industry as or nascent subsector, a business that hasn't really existed before, as you're going to raise funds in a pretty tricky I guess fundraising or deployment environment for venture capitalists. What was the overlay of the pandemic like as a co-founder, entrepreneur, as a young leader in business? What was that like for you?
Sure. It actually made it easier to get top of funnel type of meetings for with VCs. It's like, okay, let's schedule a Zoom. So like I think we are fortunately positioned where, like, recessions, crazy things, we're a pretty resilient business. And I wouldn't say that the pandemic, if anything, like, allowed us to kind of accelerate growth. But everything that you had mentioned, like, growing the business, bringing on talent, a lot of that has compounded in the right direction because we got it right early. So our first employee, his name is Billy, he's still with us. He's our senior wine and spirits professional. We were just looking for someone to write wine blogs on Upwork, and actually saw that he was uh, naturally disintermediated the platform, found him on LinkedIn, messaged with him. He ended up working part-time, for free for 3 or 4 months with us, doing more than just writing blogs, but really becoming a part of the team. And then he ended up taking the leap in June 2020 to work with us. And he's great. Our second employee, Eric, who's still with us as well, is great. So because we got it right early, all of that has compounded in the right direction. I'm a big believer that, like, the first 8 people you get is the biggest determinant of success for a startup.
Yeah, that makes a ton of sense. And I guess maybe one of my last questions is rounding out here. Again, I hate to keep harping on it, but it's just a matter of fact, as a young startup founder yourself, who are you looking at as a mentor in the space? Is there another entrepreneur, another leader that you look at as a mentor, whether it be someone you know personally or someone whose book you read or who you keep up with that really helps as a guidepost for you?
Yeah, that that's a really good question. My old boss from the value fund, he actually left to start his own firm. Me and him talk. We talk monthly. Really smart individual. Different kind of background. Like, yes, his new firm is a startup in a way, but different. So it's helpful to get some different insights. I've always found some of the most valuable people to connect with to be someone who's, like, one step ahead of you. So, like, if you're pre-seed, it's someone who just raised a seed. If you're seed, it's someone who just raised a Series A, so on and so forth. So have a friend. His name is Drew, who runs a company, Roundly X, who's always kind of been one step ahead. And when I was in Richmond, him and I would get together, once a month, once every other month, to kind of share what's going on. So I wouldn't say there's a, like, formal mentor that who is someone who's done exactly what started a startup, successful outcome, that kind of stuff, but a lot of different people like those two that I mentioned.
Yeah, that makes a ton of sense. And then I guess maybe my last question here. So you burn the boats, you're leaning on your positive momentum, whether it be actual or just or just maybe metaphorical? I can't remember the exact term you used earlier. And then you hired great people to start. But what other advice would you give other people in your shoes, or maybe the person in the step behind you who's might be looking to raise their pre-seed now or their seed now?
Yeah. The funny thing about startup advice is I might tell you something and then the next person's probably going to tell you the polar opposite. So I do think that there are a few truisms in startup world. One of them is the messy middle. So Scott Belsky, who's chief product officer at Adobe now, sold Behance to Adobe. He wrote this book, The Messy Middle, which outlines, as the name may suggest, like the middle phase of a startup is very messy. It kind of relates to that effectual entrepreneurship as well. If like things are going to go up, things are going to go down. I think that is the most true element of any startup. Like I think there's always going to be ups, always going to be downs, and trying to set your expectations to understand that is really important.
Certainly. And then maybe rounding out fully here, what you guys have had obviously incredible success so far, and I think you're up to 11,000 members now, if I did my homework correctly. But what do you have in mind? What are goals lined up for Vint as we round out calendar year 23 and head into 2024?
Sure, yeah. So about a year ago, we closed a seed round. It was $5 million round, and we've put together a really good team. And I think there are a few exciting things on the horizon here. Rounding out 2023, we're about to do our 100th collection. So I had mentioned, excuse me, we've done about 95 now. So we're coming up on our 100th. We're a few $100,000 away from 10 million invested on the platform. Those two things are running in parallel, which is exciting. Similar to that, we're about to have our 100th podcast episode. It's very funny how those three things are all kind of in line with each other. But what's really exciting to me along with those is our new institutional product targeted at RIAs, broker dealers, wealth management firms. That's growing really quickly. And then also the Vint marketplace, which is the institutional product is bringing this full circle. The institutional product is the data-driven hedge fund. The Vint marketplace is StockX for wine. So now we have those three businesses, which should lead to a really interesting 2024.
Super cool, and I'm very excited to see how all those product lines shake out for you all, and wish you nothing but the most success. And for those interested in Vint and learning more about you and the tool, where can they find you? Where can they find Vint, and how can they get in touch? I'll be sure to plug it all in the show notes, but would love to give you a moment to round out for the audience.
Sure, you can find us at vint.co. You can find me on LinkedIn. Those would be the two areas. And appreciate coming on here.
Yeah, thanks for the time, Nick, and look forward to staying in touch.
Thanks, Arjun.
Thank you.